So welcome to part 1 of the video, and in this we would be specifically talking about the Morgan Stanley, who is a foreign brokerage house. Basically, Morgan Stanley is a top investment bank of the globe. And don't think that Morgan Stanley is not in any form of controversy. You please open the Google and you yourself see that Morgan Stanley is into many controversies. But the hard reality of the life is whenever a big US bank, whether it is Goldman Sachs, Credit Suisse, it is UBS, Barclays, Deutsche, CLSA, Jeffries, probably Morgan Stanley, Wells Fargo, and anyone, whenever they enter into any form of controversy or any form of fines, this would never translate in Indian media. I haven't seen a single Indian business media channel. I repeat, a single India business media channel who dare to cover these banks. Who dare to cover these banks. And by the way, if you are thinking that the names I mentioned, they are clean, then you yourself check on the Google. And the hard reality, thousands and thousands of Indian investors, I repeat, thousands and thousands of Indian investors to bet their money based on the calls provided by these foreign brokerages houses. You know that I have taken a revised practice now, and that revised practice is that now I have started taking the printouts of the articles, which definitely is helping me a lot because I can carry forward them for a longer period of time and I can correlate the data as and when I wish to. Now this time also I have taken a printout of an article published in the Money Control, and this is 12 hours old article. So the video is on 10th March 2022. So this article is extremely fresh in nature, and this is published on Money Control website. So I have taken the printout of that. Now the heading is Morgan Stanley recommends raising active positions on Indian stocks. Now when you recommend any stock, now whether you are recommending the buy side or you are recommending the sell side. So I repeat, example, I'm just giving an example. Suppose you are recommending Infosys and you feel that Infosys, which is currently at around 1600, example, may go to 2000. Now this is your recommendation. There is a hell lot of difference between recommendation and punting. Recommendation should be backed up by a research. It should not be backed up by a punting. Assuming Infosys at 1600 and you feel that it should come down to 1200, assuming, just a hypothetical example. Even in that regards, you are supposed to have the research which backs you. And when I say research, I mean the fundamental research, which includes the financial statements of that company. Rather, technically speaking, analysis on the financial statement of that company. And by the way, when we speak about listed companies, their financial statements are available on multiple websites at free of cost. So gone are the days when to review the data of the listed company, you need Reuters or Bloomberg. Today, you do not need any form of Reuters or Bloomberg because the data is comprehensively available at most of the places. But unfortunately, the hard reality is the word recommendation is misnomerly used in the Indian media. Misnomerly. And people believe that if any foreign brokerage house, specifically talking Credit Suisse and the Morgan Stanley and many more, whenever they recommend, it means things are easy. But do you have a research? So example in this article, which is published on the Money Control, it is said that foreign brokerage firm Morgan Stanley recommends raising active position on Indian stocks after equity market held up remarkably well despite rise in oil prices. What the hell is that? What the hell are you talking? Oil is at 130 and Indian government haven't raised the price. Did as of 10th March 2022, when we speak oil is near about 130 Brent, did Indian government raise the prices? No. Because Indian government is waiting for the political uncertainty in the election bound states. And when this political uncertainty will clear, which probably taking another week or so, maybe 2 weeks or so, let it be honest, then Indian government will raise the rates. So when the oil rates haven't rises by the Indian government, how come the so-called Morgan Stanley did this form of stupidity? The real test would come when Indian government would be hiking the rate, which they would, I assure you, because Indian government will not bear the burden of the rising oil on their shoulders. The reason being, India is sitting on a huge debt. And by the way, the debt is piling up. Every budget, the paid, sold, and corrupt Indian media always focus on the tax or the income tax or something like this. But they do not focus on one thing, which is the total sovereign debt in the books of India, which, by the way, is piling up. Since it is piling up, it creates the inflationary impact, which technically speaking is known as financial inflation. So when you have wage bound inflation, once you have cost pull inflation, when you have purchase inflation, and this which I'm talking from last 2 years, and thankfully now international media raising this point, which is called financial inflation. Now this financial inflation is up. Now this is Morgan Stanley. Anyways, Indian equities have so far resisted the rise in oil prices. While the template remains one of the high volatility and modest equity returns, at portfolio level, we recommend to shift to a barbell strategy with a wider sector portfolio. The Morgan Stanley said. There are three forms of strategies which you have, which is known as bullet, which is known as barbell, and which is known as ladder. Here, Morgan Stanley, rather than mentioning ladder, they mentioned barbell. And I challenge Morgan Stanley, the analyst of the Morgan Stanley, probably the CEO himself of the Morgan Stanley, to come in public domain and let's have a chat. that how come this is a barbell strategy. Let's have one-to-one knowledge session, which would definitely helping me. This is part 1 of the video. See you in the part 2 with more stupidities by Morgan Stanley. This is Rahul Bhagan from Treasury Consulting Group. See you in the part 2.